to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, we'll hear a fascinating interview with Stuart Englert, award-winning and veteran journalist and author of 9 books, including Rigged, Exposing the Largest Financial Fraud in History, which you can find on moneymetals.com. Stuart shares his thoughts about the concerns of how governments and central banks have engaged in efforts to suppress the price of gold and discourage gold ownership, but how this mask may be starting to slip as those central banks around the world have been accumulating large quantities of gold in recent years. Mike Meharry and Stuart also touch on the broader issues of fiat money, monetary inflation, the growing national debt, and the potential for a future reset or shift away from the dollar as the global reserve currency. So stick around for a tremendously insightful conversation with the knowledgeable and well-traveled Stuart Englert coming up after this week's market update. Well, you've probably noticed the fireworks in gold and silver this week, with gold touching $3,000 an ounce and silver pushing up above $34. Gold had already been performing well over the past 18 months, despite a strong general stock market and a strong dollar. Now, with the stock market correcting 10% over the past 4 weeks, it's no longer looking like a one-way street. And new investment flows are moving toward gold in a safe haven trade. Asia and the Middle East have continued to buy along the way over the past 2 to 3 years, including central banks. If retail investors in North America and Europe start increasing gold purchases, it would add fuel to the fire. Frankly, we're barely seeing that yet, but it could be coming soon, if for no other reason than fear of missing out, often dubbed as FOMO. Not only do gold and silver both have momentum, but also the fact that the spring season, especially April, is historically a strong period for these metals. Looking at recent decades, for example, gold closes higher in April most of the time. In fact, over the past 5 years, gold has finished higher in March and April 80% of the time, and in May 60% of the time. Even with all the gains we've been seeing, though, gold is still well below its 1980 high in inflation-adjusted terms. Depending on whether you use the government's understated measure of inflation or the true inflation rate, the 1980 gold high of $850 would be at least $3,500 today. But the most interesting thing is silver. Silver rallied up to $50 in both 1980 and 2011, and it's been trapped under $35 for over a decade. However, silver has not even overcome its nominal high of $50 of decades past. But get this. Adjusting for inflation and using the government's deliberately understated CPI numbers, silver's 1980 high is close to $200. Silver also tends to accelerate and outperform gold in the latter part of a bull market, even though it starts out slow. If that pattern follows, and if gold's bull run continues, then we can expect silver to gallop way ahead here soon. Indeed, silver has already started to outperform gold in 2025, with the gold-to-silver ratio starting to slide from an historically high 91-1 to start the year to about 88-1 now. By the time the bull market for precious metals ended in 2011, the gold-silver ratio actually fell into the low 30s. If that pattern repeats, that implies a dramatic outperformance of silver as compared to gold. So keep a close eye on silver, particularly if the gold bull has a lot more to run. As for this week's market action, before we get to our interview for the week, gold is coming in at just a tick below the $3,000 level here at the moment and currently trades at $2,998 an ounce, up 2.6% for the week. The L metal is set to end the week in positive territory for the 10th time in the last 11 weeks. Turning to silver, the white metal is up 3.5% since last Friday's close, having gained over $1 an ounce. And while it's come off its highs from earlier in the week where it eclipsed the $34 level, it currently comes in at $33.88 as of this Friday midday recording. And finally, the PGMs are both having strong weeks as well. Platinum is back over $1,000 to check in at $1,010, good for a 2.6% gain on the week. Palladium, which now trades at a discount to platinum, is up a more modest 1% to check in at $996. Well, now, without further delay, let's get right to our exclusive interview.
Greetings, I'm Mike Meharry, a reporter and analyst here at Money Metals, and I'm joined today by Stuart Englert. Stuart is a veteran journalist and the author of, I think, 9 books, including Rigged, exposing the largest financial fraud in history, which gets into the way the government and the powers that be have tried to trick us into thinking that our fiat money is as good as gold. And he's also one heck of a musician. So, Stuart, you're a Renaissance man. Thank you so much for coming on the show today.
Good to be with you, Mike. Good to be with Money Metals.
Well, we appreciate you. We appreciate the contributions that you've made over to our website at moneymetals.com/news. And I wanted to start off talking about a topic that you actually wrote about not too long ago, and that's gold revaluation. And I think this can probably dovetail into a little broader discussion about the state of our money and some of the things that you hit on in your book. But before we get into the bigger picture, can you start off by explaining exactly what is meant by gold revaluation? I think people hear this in the news and they're like, I don't know what this means.
Sure. Well, I'll do my best here. Gold revaluation involves a legal resetting of the official or government's gold price. All right. The gold price can increase or decrease with a revaluation, but the 4 major revaluations that have occurred in U.S. history have all seen the price increase, the official price rise. And those were in 1884, 1934, 1972, and 1973. The current official or statutory gold price is $42.22 an ounce. And that was set by an amendment to a law passed in 1972 called the Par Value Modification Act. Mm-hmm. And what it did was revalue gold by devaluing the dollar. It was approved by Nixon in 1973, and the statutory book price is the statutory price is the book value of the gold held by the U.S. Treasury. Mm-hmm. So the official gold price is not the same as the market or spot price of gold, which is presently around $2,900 an ounce.
Right. That's a perfect explanation of that. And as you mentioned, this talk of gold revaluation isn't unprecedented. And I think to me, the most significant that I've kind of focused in on is when FDR did it back in the 1930s. But as you mentioned, it's been done since then as well. So let's say the government does do this. What's the benefit to the government? Why would they want to revalue the book value of the gold that supposedly is sitting in Fort Knox?
Okay. As I mentioned, revaluing gold higher would increase the book value of gold held by the U.S. Treasury.
Right. This
would allow the federal government to expand its balance sheet, borrow, and create more currency to pay its bills, or manage and restructure its debts, as has occurred in the past. It likely would also boost gold imports, mm-hmm. since gold flows toward premium prices. And it also could encourage gold production by creating a profit incentive for miners.
Right. So good deal for the government. And I've often said that, the Federal Reserve and the monetary policy and this persistent debasement of the dollar, whether it's through something like revaluation, which is a pretty radical move, or just the everyday inflationary pressure that is built into the system. This is kind of the engine that drives what arguably is the biggest government in the history of the world. The Federal Reserve basically incentivizes and I guess facilitates the ability of the federal government to borrow and spend, as you just mentioned.
It finances the government debt. Is what it's doing. Yeah.
So it's great for the government, and this explains why government people are always eager to devalue gold. Whether you go back to Rome with them, literally clipping gold out of coins, to what they do today, but. What's the backlash on the people? Because I'm going to guess that this is beneficial for the government, but not so much for me.
Well, it could benefit gold bugs, actually.
Fair.
First of all, raising the official gold price would benefit gold owners by formally acknowledging and reaffirming that gold is a fundamental monetary asset.
Right.
And I think the mere fact that it becomes into the public to the public's attention is good, right? For people that are advocating sound money and a return to some type of gold backing.
Right.
But you're right. People that are only holding dollars, they wouldn't fare so bad with a higher gold price. Since gold is priced in national currencies, revaluing gold upward would result in devaluation, as I mentioned earlier, of those national currencies, which includes the U.S. dollar. And if gold revaluation is used to expand the nation's balance sheet and its indebtedness, the dollar would depreciate and lose additional purchasing power. And that's always the case with fiat money.
So, given that this is kind of par for the course when it comes to the government and the way it handles its money, do you see this as kind of part of a bigger picture? Like, is there something else that's going on deeper under the surface that is kind of bringing this up now?
Well, yeah, I absolutely believe that the United States as an empire is at a crossroads with its monetary system. We're in dire financial straits. If you look at the national debt and the total U.S. debt, not just of the government, the federal government, but the state government, the local government, and the corporations and the individuals, we're laden with a lot of debt. And in addition to that, we've had 50 years of trade deficits. We have these huge trade imbalances, and the dollar is too strong. So President Trump has talked about this. He wants to increase exports. Well, how do you do that if your dollar is strong?
Right.
You can't. You've got to weaken the dollar, and revaluation would do that.
Right. So, how much would they have to actually revalue gold to make it at a price that actually represented the realities of our monetary system? Do you have any idea of what that number would be? I've heard $10,000. I've heard $15,000. What's kind of your thought on that?
I have no idea because I'm not much of a mathematician and I haven't run the numbers. Okay.
Yeah.
I'm a wordsmith, if you will.
Right.
But I've read the same things that you have. Nick Barishev wrote a book years ago called $10,000 Gold. And James Rickards has suggested $15,000 an ounce, and he's since increased that, I think, to $20-some thousand an ounce.
I remember a few years ago, Rickards was on $10,000 gold, so he's bumped that up quite a bit over just the last probably decade.
Absolutely, and that's because the money supply is growing and the indebtedness is growing. So it only makes sense that it would have to be increasingly go higher.
Now, we've seen quite a bull run in gold over the last year and a half, and we're seeing much increased central bank gold buying. So people are obviously interested in gold. They recognize it as a sound money asset. And a lot of people are talking about the possibility of de-dollarization. Is that something that's kind of on your radar, that maybe the world is becoming a little bit more sour on the dollar and are starting to turn to gold and maybe even other currencies?
Well, sure. It's been said before that the dollar is the prettiest pig in the pen, and I believe that's true. It's the world's reserve currency, and that's why it has stature, and it's still used in the bulk of trading and transactions around the world. But people that are using the dollar, other countries are figuring out that it's not it's overvalued, and the debt instruments are not, the U.S. debt instruments, our bonds and treasuries, are not as viable, if you will, or sound as they used to be because of our indebtedness and trade imbalances. So that's why they're accumulating gold. That's why the central banks around the world have been on a gold buying spree for the last 15 years. Their gold purchases, net purchases, have increased for that many years, which indicates they're losing confidence in the dollar.
Yeah. So we've talked a little bit about the fact that, to truly, we've got what? I think, what'd you say, $40 and change is the current?
42.22 is
42.22. Okay.
Yeah.
So, and then we have a market spot price that is, as you mentioned, $2,900, give or take, kind of bouncing around in that range right now. And we've talked about the fact that to truly revalue gold, we're talking 10, 15, 20, a much bigger number than what we've seen. Why is there this discrepancy, do you think, between the spot price, this set price, and what would actually probably be a more realistic price for gold? How have they managed to keep gold even looking as good or as bad as it, not bad? How do they keep the dollar from looking as good as it does compared to gold?
Well, it's multifaceted. First of all, you have to remember that the world hasn't been on a gold standard for, over 50 years.
Right.
So the majority of people are not experienced or knowledgeable about gold as money. The older people like us that grew up, I guess, I don't know your age, Mike. I'm 63. So I remember a little bit about silver being taken out of the coinage, and I remember when Nixon took us off the gold, international gold standards. But the majority of people alive today are not aware of that. And then there's been, I'd call it a propaganda campaign, on the part of the government to discourage gold buying.
Yeah, for sure.
And to make people think that the dollar is as good as gold. And that was the intent of the Bretton Woods Agreement, which fell apart, 50 some years ago. So I think there's a combination of factors. A proposed Fort Knox gold audit that included the phrase conspiracy theory and conspiracy theorists 9 or 10 times.
Right.
Without answering any real valid questions about the nation's gold holdings. So there's a tactic in the mainstream media to disparage gold and make gold proponents look wacky, I think. And then, I guess who Dave Ramsey is,
Oh, yeah.
the talk show host that talks about getting out of debt, which I support.
Sure.
But, he's called gold a stupid investment and encouraged listeners to sell their gold. And then I heard Susie Orman, who's another financial, guru, if you will, warn people against buying physical gold. She recommended owning gold through an ETF, though ETFs are among the mechanisms that are used to suppress the precious metal prices in the futures, market also. So there's been a concerted effort to disparage gold ownership. But I think that mask is being removed, if you will. And if people follow what the central banks are doing around the world, I think they'll understand what's going and what's going to transpire.
Yeah, I think part of the problem, too, is that they've managed to disconnect the concept of price inflation from monetary inflation, right? Now, when we say inflation, it's just, prices are going up. And of course, prices can go up for all kinds of reasons. And it allows the Federal Reserve and government people and their pundits and supporters to basically say, oh, yeah, we're having inflation because of this oil shock or because of Putin's price hikes or greedy corporations or whatever it is. And people don't recognize the inherent connection between this concept constantly increasing money supply, which is made possible by the fact it's backed by nothing, and the fact that prices are going up. And, it almost feels to me, and I'm interested to see if you kind of have this same sense, that they're starting to have a hard time keeping the lid on that, right? They were able to kind of hold off that price pressure after the 2008 financial crisis for a while, but after the pandemic, it's kind of cut loose, and I'm wondering how long they can keep the lid on it. Is that kind of your sense as well?
Oh, absolutely. It took me a while to understand the difference between monetary inflation and price inflation. Monetary inflation is an increase in the money supply,
right,
which depreciates its value, where price inflation can be caused by different factors, supply and demand issues, but it also can be caused by monetary inflation. So, I'm on the same page with you there.
So, you've talked a little bit about the way that the government has kind of run this psychological campaign, and we also know that there's some of these manipulations that can be done with the paper markets and whatnot. And, arguably the gold price is much lower than what it probably would be under completely natural market conditions. Do you think that at some point the powers that be are going to lose control of that, and you're going to start to see gold really begin to increase? Regardless of whether they do the revaluation or not, is gold going to revalue itself at some point?
Well, that's a good question. Either way, it's going to happen. Mm-hmm. Whether it's by law and legislation, and a government or a leader moving back to gold, or whether it's a grassroots effort, if you will, that blows the lid off the paper derivatives market. I keep wondering, if we got rid of derivatives, all this paper trading, what the price of gold would be. Can you imagine?
It's hard to tell.
I keep asking myself, where do these derivatives come from? I think they're conjured out of thin air, just like fiat currency.
I was going to say, just like the money.
Yeah. But who creates them, and how do they suddenly appear? And why were they created? Why were they? If we look at some of the documentation, they were created in the gold and silver market to suppress the price.
Mm-hmm. Well, I keep wondering that, anytime that it's like there was the famous speech, I think it was the first Star Wars movie where the guy's talking about, the harder you squeeze, the more systems that are going to go through your fingers. And it feels like we're at that point with the monetary system. They keep squeezing harder and harder. And it's like, can they control this any longer? And it's really going to be interesting to see how this plays out over the next few years, because there's so much. I would argue there's a lot of malinvestment, and of course there's just piles of debt in the financial system because of the way that the Federal Reserve has manipulated the money supply. And we still haven't dealt with a lot of those things yet. So it'll be interesting to see how those things come down the pike.
Many of the markets are overinflated, if you will.
Yeah, exactly.
The housing market, the stock market, the bond market, all these markets are overinflated, but gold is held back.
Yeah.
In comparative, if you will. And we see these bubbles pop over and over and over. The tech bubble, the housing bubble. Well, what's the next bubble that's going to pop?
Yeah.
And every time these bubbles pop, I think a few more people become educated about our monetary system and the fiat currency and how it loses its value.
Yeah, I think a lot of people have deemed this the everything bubble, because it really is. I mean, you can look at all the way down, virtually every asset class, again, other than precious metals and a few other commodities. There's so many things, from art to, antique classic cars. All of this money has flowed into these things over the years. And that's what I try to explain to people, that when you have this monetary inflation, it doesn't just show up, in the price of groceries, although it can. It often shows up first in these other asset classes like the stock markets and whatnot.
But we see it in grocery prices now, too.
And we definitely are.
That's where really most people recognize inflation and that something is wrong.
Yeah.
All you have to do is go to the grocery store. I've never seen, I don't know if in my lifetime I've seen grocery prices escalate as much as they have over the last couple of years.
Yeah, I know I haven't, at least in my cognizant time of buying groceries. In fact, yesterday I was at our local Publix and picked up a 2-liter of RC Cola. And they're on sale 2 for 1. But one 2-liter bottle is like $3.80 some cents. And I remember very vividly, within not too long ago, I was paying 99 cents for a 2-liter of soda like that. So it is crazy. It makes you realize the fact that the actual pace of price inflation is much higher than the CPI and the official government numbers would have you to believe, which is another way that they kind of suppress and play this propaganda game. They understate the malfeasance that they're creating. You wrote another article not too long ago and noted that this year marks the 50th anniversary of gold legalization. And I bet a lot of people don't even realize that private ownership of gold was illegal for quite a while. Can you kind of give an overview of that anniversary and kind of set that up and what that means?
Sure. 50 years. It's been 50 years that Americans have once again been allowed to purchase, own, buy, sell, trade gold. Mm-hmm. And that was phenomenal. You're right. Most people don't realize that President Roosevelt, back in 1933, decreed gold illegal to own, which is amazing to me.
It's
because
crazy.
It's the only money that's mentioned in the Constitution, gold and silver. Mm-hmm. And yet, that tells you how far the United States has gone away from the Constitution right there. When gold was deemed, its possession was deemed illegal, and it was demonetized domestically, and think about it. The international gold standard ended in 1971, but the domestic gold standard ended much earlier than that, back in the 1930s. So the American public is far removed, if you will, from gold as money. Mm-hmm. But again, I'll repeat it. The central banks around the world that are accumulating mass quantities of gold, they're in the know. They know that gold has fundamental monetary value.
Yeah. Over the last 3 years, the central banks have officially added over 1,000 tons of gold each of the past 3 years.
That's right.
And, if you put that into some perspective, it was averaging around 450 to 500 tons. So it's doubled over that last 3-year period. And it's interesting to note as well which banks are doing this. You're looking primarily at emerging markets banks, India, China. A lot of Eastern European banks are adding gold. So interestingly, it seems to be a lot of the countries that may have a vested interest in not being quite so exposed to the dollar.
Right.
And I think it's interesting because, you mentioned the fact that it was Roosevelt who demonetized and made gold, quote unquote, illegal in a domestic sense. And then we had Nixon, who closed the final gold window and made it took us off the international gold standard. And both of those times it was in response to massive expansion of government and government spending. We had the New Deal and then the Great Depression and then World War II. So you've got Roosevelt. He needs more money. We need to borrow and spend more. Then Nixon, you've got coming on the heels of Johnson's, what was his, the Great Society. I get all of the great things that government has done for us mixed up. Yeah. And then, of course, you had the Vietnam War. So again, you see this kind of at our expense, at the expense of sound money. You see government
there's a direct parallel between war and government debt and deficits. Uh-huh. I mean, I've been researching this the last couple of years, working on another book.
Fantastic.
And it's just phenomenal to see the parallels. Whenever kingdoms, governments get into to problems financially, they go to war, or they go to war and then get further into financial problems because they're borrowing to try and expand their empires or their regimes, their power, their wealth. And yet it increases the indebtedness for the public. Right. And we become enslaved by it.
Yeah, I think Madison warned that it was, I don't think that I know, Madison warned that war was the fruit of the erosion of every other liberty because it is the mother of taxes. And, from there it goes. So, really appreciate your insights on these subjects. And I'm sure that this has maybe whetted folks' appetite to read your book. So if you can let folks know where they can find your book and then where they can follow the other work that you're doing.
Sure. Well, Mike, it's been good joining you. Actually, Money Metals in your bookstore, you have copies of my book. It's also available on Amazon as a ebook or paperback. And then I started a Substack late last year, and that's where I wrote the gold legalization story that your organization published. Mm-hmm. And people can go there. It's Stuart Englert Substack. And I've only written 3 articles thus far. And I don't write a lot. I've been more of a book researcher and writer. But when my research reveals something that I think is pertinent, where I can tie the past to the present, I like to write these articles to inform people, because I think the best way to look forward into the future and potential events in the future is to look back and see what's happened in the past. I think it was Mark Twain that said, history doesn't often repeat, but it often rhymes.
Yeah, I love that quote. Tease your next book for me.
Oh, well, it's Debt, Bondage, and Financial Servitude. And I've been working on this thing for 4 or 5 years. I've read parts of over 500 books. Wow. But it talks about how debt becomes, how debt enslaves us. Mm-hmm. But it's all tied to the monetary system, you understand? And these fiat currencies and these financial scams that we get attracted to. And because we live beyond our means, just like our governments. So it's a very interesting topic. And I hope to come out with the book someday. I'm probably about 2/3 finished with it at this point.
Outstanding. Well, that's a great topic. I talk about the national debt all the time, and most people just look at me cross-eyed like, it's no big deal. And I say this all the time. Things are perfectly sustainable until they're not. You kick the can down the road, but eventually you run out of road. And I think the debt bubbles that we see, not only with government debt, but consumer debt, corporate debt, eventually that has to catch up. And so I'm glad that you're digging into that. Well, I hope folks will check it out. I hope folks will get your book, and really appreciate your insights, and would love to have you back again sometime.
Well, thanks so much, Mike. Good speaking with you, and all the best in your future endeavors there at Money Metals.
Thank you so much.
Very enlightening conversation there, and I hope you enjoyed it. And that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. And don't forget to tune in to the Money Metals Midweek Memo, hosted by Mike Meharry and airing each Wednesday. To listen to any of our audio programs, just go to moneymetals.com/podcast or find them on whatever podcast platform you prefer. Until next time, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.